Welcome back to the show, everybody. Check out these headlines. We got a FedNow partners list that'll make you drop. We got Ripple executive talking. You're going to want to hear it. Ripple partner IPO. And how about XRP burn rate? Could it equal $100 XRP? You might love that article. And an XRP Golden Cross technical analysis. I know you're going to love that one. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on Twitter and YouTube for exclusive content. Right now, it's $1.23 trillion market cap for crypto. The market is off by 2%. Good morning, everybody. 30,300 plus for Bitcoin, 1,900 plus for Ethereum. Tether market cap is 83.3 billion plus. XRP is back at 47 cents, just under the critical line of 48 cents that we said we had to hold. We will watch it closely. And while we do, check out these couple artificial intelligence jokes created here about gold and the dollar. You tell me which one you like here. Shout out to Jason Cousins from GlintPay. This is nice. What do you call a fiat currency that has been inflated so much that it's worthless? A dollar bill. Why did the dollar bill look so stressed at the bank? Because it saw gold bars staying calm and stable and realized it had a lot of change to deal with. He says here, I reveal which AI created which joke after the poll ends. Gold is security, Glint it's key. And look, if you're not aware of it and you haven't checked it out, GlintPay is amazing. And you need to click the link for GlintPay underneath. They're still running 50% off insurance and vaulting fees for the next year. And I tell you, this is a remarkable opportunity because it is a chance for you to become the alternative to banking, your own personal alternative to banking, using physically allocated gold connected to your MasterCard debit card. Make sure you click the link underneath and you won't be a joke when it comes to the dollar bill. That's for damn sure. Then there's this guy right here. Jim Cramer warns against investing in Bitcoin. I said, oh, there you have it. Bull run confirmed. The inverse Cramer, where's he at? I know he'll be out here soon. Everything this guy says, the opposite always happens, doesn't it? Ripple set to host the first policy summit in Thailand. We're excited about it. We will keep you up on it when we get little clips of it if we do. And here I wanted to share this with you also because it's FedNow. Merlin Crypto Future Invest says, just as excited as you are, so I'm going to say it again. In this timeline, based on observations and diving deep, we will be in now 5 to 24 months in a drastically different but fruitful period for those who work patiently and diligently. And I'm going to tell you, and I don't feel I need to play this video because it goes through FedNow, Volente Pay, Volpay, RippleNet, ODL, XRP. We know all of these are entities and players that can play a role in the future of how all of this works on the new domestic payment rails and using that liquidity for cross-border payments. What I wanted to say about this is that really captured me here is that we all know FedNow is going live this month. We know the date that we have is July 20th. But what I wanted to share is the way he's forward thinking, 5 to 24 months in a drastically different but fruitful period. You know, I believe this myself because I believe, as I've said multiple times on the channel, that crypto itself is an extremely small part of what I'm after and interested in as an investor in this space. And what I feel like Merlin's pointing to here is exactly that, is what the space looks like when we start to see the traditional market products become digitized and tokenized. And that is really why I'm here. And speaking of that, looking at just this list here, Chad says to all of us, there are essentially two lists. The first list is a certified participants. They are intended to go live on the 20th of this month. Second list is the pilots of the Faster Payments Council that have committed to joining after, like Target, Best Buy, etc. If we go to the list very quickly here, you can see smattered throughout this list, there are people you will recognize as Ripple partners like ACI, and you'll see others, BNY Mellon, right? You will see other entities on this list, but just look at the enormity of the list itself. Finastra, we know is there, and I'm not going through trying to dig out each one of them, but you know the list is here, and it is awful long, and it is quite promising to me. And I like this comment and exchange down here. Someone asked Wrath a comment, says, when FedNow starts and the Ripple partners above start using ODL and FedNow starts using the on-demand liquidity, will that impact XRP coin price too? And then Chad says here, they won't use it to start, build the roads first. Wrath says, yeah, that's a long ways down the road at best if it were to happen. I think the FOMO would drive price more than the actual on-demand liquidity. On-demand liquidity itself should stabilize volatility. I'm hoping for a gradual climb as it becomes increasingly important, not a rocket. And, you know, I have expressed much the same thing. And if anything, if we do see what people call a flip of the switch, I would imagine that we would see much like the Shane Ellis theory, where there's like stair steps of price points met and buyouts that take place and happen. But I mean, the best thing for it to happen, and some people don't want to hear this, is the gradual influx and onboarding of participants that can bring utility and liquidity to the network, and that equals price and value over time. Here is a really promising set of tweets here that should reinforce what we know about FedNow and what is really coming. And it's coming from Bob Way, early Ripple employee there. Help War Room and patent a lot of things that Ripple are using today for the success of RippleNet, on-demand liquidity, and the use of XRP, right? So let's take a look at these right here, these 4 slides. He says, I'm not sure I can add a lot of insight. I'm sure things have changed a lot, but just for clarity, ISO 20022 is way bigger than you might think at first. It replaces the previous SWIFT standard, MT-MX, and adds a lot of other things. If you go on to read what he says here, he says, the reason this 20022 transition is extremely helpful to Ripple's bank sales team is this means that every bank is required to implement new technology. Banks hate to change an already working process. Change can introduce new problems, which means bankers get fired. The number one reason most bank integrations don't happen, new system development is expensive and risky, mistakes can generate bank losses or fines, bankers get fired. The person you are negotiating with must have product budget, development budget, risk appetite. With a mandatory 2022 change happening, it says here, the person you are negotiating with only needs to have product budget. Money for development has already been allocated elsewhere. Nobody gets fired for following a mandate. That makes the sale a much easier lift for Ripple. And then finally right here, that being said, bank software sales is still a hard process, especially with the SEC suit still adding FUD to the process. But even if banks wait for a settlement, their 2022 upgrade system become much easier for Ripple to integrate with. Then the biggest impact is going to be that even smaller banks are going to be able to upgrade their systems, and that creates a much larger pool of on-demand liquidity compatible banks. Smaller banks get the most benefit from on-demand liquidity. It lets them cut the larger correspondent banks out of the flow and cost. How about that? So this is exciting to me because we are talking about a mandate that's happening throughout the financial system. And when you have a mandate, you no longer have to sell the idea to someone. It's happening. And that is extremely promising. And here, right here, we're going to hear from Rahul Advani here from Ripple, the Director of Policy in the APAC region here. And listen to what he says about the most recent license from the Monetary Authority of Singapore.
All right, congratulations on the in-principle approval for a major payment license from the MAS. So tell us, what does this mean for Ripple's operations in Singapore and the Asia Pacific?
It allows us to offer regulated digital payment token products and services, which will enable us to better support and scale the use of on-demand liquidity, or ODL, by our customers in Singapore and across the APAC region, and that are looking to explore blockchain and digital asset technologies for their cross-border payment and treasury use cases. With on-demand liquidity volumes surging in Asia Pacific, we know that there's great appetite from customers in the region to engage and explore with blockchain and digital assets. And this obtaining the in-principle approval of the major payment institution license to better support these progressive customers and scale our ODL services to ultimately build a more inclusive and borderless financial system.
Okay, right. Rahul, so how does Singapore then fit into Ripple's global operations?
Great question.
Singapore's location makes it a prominent gateway to emerging markets in Southeast Asia, as well as developed markets across the Asia-Pacific region. We're a global business, and we remain hyper-focused on building our teams outside of the US. About 90% of our business is global, and Singapore, and to a large degree, the broader APAC region, is one of our fastest growing regions and remains high on our list for recruiting.
You know, at the start of the year, there was speculation that Ripple's case with the US SEC will be settled by mid-year. Well, we're here now. Can you give us an update on how the legal case is unfolding?
We continue to push for a speedy resolution, and we look forward to proving that Ripple did not violate securities law and that the SEC never provided Ripple with fair notice that its actions would ever be prohibited under the law. The decision and timing is ultimately up to the judge. We don't have any control over that.
We get it. We know you don't have any control over that, but you know what? As they were talking there, I want to highlight it's any day, right? It's any day. Now, it could go as late as September that we've heard as well, but the truth is that's any day at my house. We are closing in on this thing as fast as we possibly can, and there will be a decision, and it will be sooner rather than later. And while we're taking that in, listen to this. Billion-dollar Ripple partner to go public in the United States. Will it foster on-demand liquidity, XRP adoption and development? This is nice. We're talking about NEOM, ladies and gentlemen, valued at $2 billion. How about that one? Oh, I love this because this seems extremely bullish that NEOM wants to go public in the United States, and it appears that they will be allowed to. And we know damn well that they use XRP, so this is feeling extremely bullish to me. And speaking of bullish, we're going to look at a couple bullish things over the next few pieces here before we get out of here. Now, I want you to take them in stride, but look at this because this speaks to what I was talking about earlier about FedNow. XRP is not a share of stock. It is a utility protocol to tokenize value. There are over $1.2 quadrillion to be tokenized. The derivatives market is $500 trillion alone. XRP to capture just 10% of one market is already at $50 trillion. There's also a housing market. The reason I bring this up is because we just heard Craig DeWitt say, when he was on Elizabeth's show, we just heard Craig DeWitt say there that it sounded like a funny number, but he's talking quadrillions. And the reason I believe he's talking quadrillions is because he's pointing to the larger part of why I'm here. Tokenization. Tokenization of the entire traditional markets. Bonds, stocks, the entire derivatives market, and everything else that you can think of. And that's why we're here. And that's truly what XRP can help to do, is to help to bridge and settle value of all things tokenized. So this is a remarkable moment. Now, top expert says $1,000 per XRP, but that's not the point of the article for me. The point of the article for me, just like here, it says analysts believe $100 per XRP is inevitable. And look, I'm not shooting those things down. I am here for 4 and 5 digit XRP. I have a shallow bag that I'll take at $10 to $25 when I decide. You know, there's all kinds of different stages throughout the growth and adoption of this. I hope to ultimately not have to sell my long-term holding of XRP, and that that I can earn a return and it become the holy grail of being able to earn a return or dividend off of that asset. That would be fantastic too. But the reason I'm showing this is because the burn rate is quite an interesting conversation. Shout out to 24 Hours Crypto, give him a follow. But he says a massive spike in the daily burn rate 30 days ago was really 247,016 XRP burned and gone forever in 30 days. He says about 8,233 a day, which goes perfectly with the below 24-hour burn rate. Now, it was highlighted here that Poloniex had closed out and got rid of, I think it was 85,000 XRP accounts off of their platform. So this is where the majority of the burn came from. But I also bring this burn rate up because we can't forget that there is a burn rate, right? There's absolutely a burn rate to XRP. And they say as the price goes up, that burn rate will slow down because you're not burning every XRP transaction is a bigger price per XRP. So that may also cause them to change the minimum requirement for an account. So there's a lot of factors in here we need to pay very close attention to. And I wanted to share the burn rate has shown consistently over the past month, implying potential upward trend, specifically to 247,000 plus burned XRP. It says the analysts constantly track the burn rate of XRP community for at least 5 months back when the average incineration was about 2,800 XRP per day. So he was saying based on that burn rate, if that schedule were to continue and trillions of dollars flow into the market, $100 per XRP is absolutely inevitable. And look, I am completely bullish on that. Now, Neil Hartner, senior staff software engineer at Ripple, wanted to point out here that the XRP ledger account deletions burned 2 XRP. And in June of 2023, just last month, Poloniex alone deleted 85,566 old XRP ledger accounts, which burned over 171,000 XRP. They have finished deleting the accounts. So he's showing an anomaly in this. But the reality is you have to start to apply the idea that we get some legal clarity in this case and we see mass adoption start to happen with companies, not just retail holders, but with companies that are going to use the asset every single day to make their business better for themselves and their end customer. That's what we're talking about here. And speaking of better, let's take a look at what could be better here. This is Coins Kid this time. Shout out to him. He said in 2017, XRP printed a 10 and 20 golden cross. Last time we saw a monthly 10 and 20 EMA golden cross was in 2020. XRP rallied over 720%. If we see another golden cross, a 720% rally sets a new all-time high, and the minimal target, if we see the all-time high taken out, is $9 for XRP. How about that one? Again, I wouldn't get upset about that, and I shared this just the other day. You have to think about these $5, $10, $15, $25, $50 price points and ask yourself, if you do have one of those price points as a target for yourself, would you take it at $9 because you know there'd probably be a huge dump at $10? Would you take profits at $14 because you know there's going to be a huge dump at 15, 25 versus 24? You know, these are things that we should be thinking about inside of our minds about what our strategy is, what our exit strategy is. I mean, some people are going to hold until we figure this automated market maker thing out. You know, some people don't have a shallow bag and a smaller price point to take a small holding and get a taste. But if you do, these are things we need to start rolling around and considering and figure out what's best for you and your family. Not financial advice from me or anyone else, just my digital perspectives. I'll catch all of you on the next one.